Hi, good morning, everyone. I'm Thomas from Hello. I'm very happy to have you all here with the first session of our series of webinars on funding deep tech. For those of you who don't know us already, Hello, we are a global organization on a mission to unlock the power of deep tech and foster the deep tech ecosystem. So for the past 6 years, we've been running startup competition for deep tech early stage startup. We've been organizing events to gather basically everyone who can make deep tech possible: investors, accelerators, entrepreneurs, of course, corporates, researchers, and so on. And we also, monitoring what's happening in the deep tech ecosystem. We are publishing a lot of reports. The last one is we published a mapping of deep tech investors. I'll give you the link at the end of this webinar if you haven't seen it already. And unfortunately, our big annual event, the Global Summit, has been postponed because of the current pandemic from March until this October 2020. So I hope we'll be able to see you all, even if it's with masks, on the 22nd and 23rd of October this year. And so in the meantime, we wanted to, give you more information to share a bit what's happening in the ecosystem. So that's why we launched this series, and this first live virtual session will be focusing on the current and the short-term impacts of the pandemic on deep tech investment in Europe. And then we'll have more sessions in the coming weeks focusing on specific industries, on other geographies, and on other topics. Maybe a quick introduction about the tool that we're using, Livestorm. If it's the first time that you're using it, there are like a few things that you should know. So you have different tabs. You have a chat where you can react to the discussions in real time. You have a questions tab where you can ask the questions to the speakers. And most importantly, you can upvote the questions that you like the most. And at the end of the discussion, we'll be selecting the most upvoted questions to ask to the speakers. And then you have another tab, which is a poll tab, where you'll be able to answer the polls that we're launching related to the question asked to the speakers. So keep an eye on those tabs. The first poll is live to get a bit more information about who you are in the audience, if you are mostly investors, startups, or others. And so that's it for the tool. So as you can see in this first webinar, we have 3 European investors, each one from different type of fund. We have Irina, Haivas, a partner from Atomico. We have Alexandre, Terrien, who's co-founder and general partner of Future Positive Capital, and Matthieu, Repellin, investment manager from Airbus Ventures. And the panel will be moderated by Benjamin Joffe, partner at SOSV, and a longtime partner of Hello Tomorrow. So I just leave the virtual floor to Benjamin and to our great speakers for today's discussion. Have a great discussion.
All right. Well, hello, everyone. I see that currently there's over 80 people online. I guess everybody can see that in we're close to 100 now on the people tab. The first poll have been launched here asking about investors and startups. Looks like for now there's about 40% investors, 30% startups, and about a quarter others. So I noticed a few corporates on the others. So I think it's a great chance that Hello Tomorrow is organizing this event because it's quite difficult to have visibility of what's going on. So we're going to discuss the state of investments in Europe during the pandemic and what kind of outlook our different panelists have. So maybe to get started with introduction, I'll turn to our panelists to tell us a bit more about their company, the stage they invest in, the geographies they invest in, and then we'll go into as well their personal experience. So maybe starting with Irina, if you can tell us about Atomico and your sectors on the areas of investment and geography.
Sure. So hi everyone. Great to be here. So just a little bit about Atomico. We are one of the largest investment funds in Europe. We focus on Series A and beyond, and we invest across deep tech, enterprise, and consumer. We've been funded by the founder of Skype, Niklas Enstrom, and have kind of a very much an ethos of providing hands-on support and to our founders. In terms of myself, I'm a partner at Atomico. I co-lead our deep tech investments and also the enterprise investments. And I have a background in healthcare. So a lot of my deep tech focus is in kind of biology related and healthcare related areas.
And if I'm correct, you're actually also a medical doctor. It's not
yes.
Not general background in healthcare.
I am. That is true, but a long time ago. So yes.
Have we lost Benjamin?
It seems that we lost Benjamin. Maybe Alexandre, can you just introduce yourself?
Yeah, no problem. Happy to. Delighted to be present on the panel with everyone. Thanks to the folks who've joined. My firm, Future Positive Capital, is a firm that's based in Paris, but we invest across Europe at the early stage, seed to A, and only in companies that apply advanced technologies to solve what we think of as pressing global needs. And so we've had a lot of run-ins with companies from the Hello Tomorrow network and continue to do so. Matthieu, you want to go maybe?
Yeah, I'll go. So Matthieu Repellin, I'm with Erebus Ventures. We're an early stage VC fund. We focus on seed, Series A and B all across the world, essentially US, Europe, Southeast Asia, Israel. We act as a financial VC, and we use our network in the in Airbus and in the aerospace ecosystem and beyond to help the startup. And we try to combine the best of basically VC and corporate VC. To date, there's about 35 portfolio companies that we invested in, and so I'm personally based out of Paris. And semiconductor engineer by background.
So while waiting to get Benjamin back, maybe we can start with Irina. So what have you been focusing on in the past 2 months, particularly since Europe has entered lockdown?
So it's really been a mix. So a part of it has still been business as usual, meeting new companies and then making investments. But obviously, when this COVID happened, our immediate focus was on our portfolio companies. So we spent a disproportionate amount of time, especially in the first month, to make sure that our portfolio companies are well set up for the next phase and work with them on various strategies, which are all kind of individual to the specific companies, from preserving runway, but also, rethinking milestones and thinking about potential impact and scenario planning. So that's been it in a nutshell.
Okay, thank you. Benjamin, you're back with us?
Yes. Yeah, sorry, some internet issue. I guess that's some of the kinks possible. So I heard Irina was commenting on how they're dealing with their current portfolio. So what? How about Alexandre? Have you gone through introduction?
Matthieu and I have both gone through introductions.
Okay.
Yeah, well,
excellent.
No problem.
Okay, so I think at the moment, kind of the new normal for VC seems to be managing the portfolio, but one thing that's probably of interest to many of the startups in attendance is to understand if you're also doing new deals. So there's probably two types of new deals. Is those you've already been working on prior to the pandemic, and those you are looking into at the moment. So if maybe Alexandre, if you can talk about whether you guys have closed the funding of new startups during over the past 2 months, and how you're looking at new deals as well.
Yeah, more than happy to share some information on that. I think maybe just before diving into that detail, it's worth taking a step back and looking at how the current situation might influence markets and what consequences for VCs and startups. And just in terms of context, I think that informs a lot of how investors are thinking about new deals. To your question, I mean, I think I'm not a public market investor, but when I look at the 6 months trend on both the S&P 500 and the NASDAQ, even though we saw a big crash in March, what we're seeing is that the markets have recovered to their 6-month mark. And I have to admit that I'm struggling to rationalize that. When you have 30 million unemployment claims in the US, when small business in the US has been virtually wiped out, when there's abnormally high government debt just in the last 3 months, when demand in so many of the sectors that particularly VCs have historically invested in has basically crashed. So I think what we're seeing is that the stock market as it's run today is virtually disconnected from the economy, and I would assume that that's going to materialize as an issue in the foreseeable future. I think that the founder of Social Capital says it pretty well when he says, asset inflation does not solve income disparity, right? This is not actually providing more opportunity and employment in the way that you'd expect the stock market to function. So, I think a lot of this isn't currently priced in the market, and I wouldn't be surprised if, instead of seeing any kind of solid recovery, we've got a kind of tough few months or even potentially years ahead of us that are not currently recognized in public pricing. And so the consequences of that are going to be felt in venture. The liquidity aspect of venture, the need for liquidity, means that you kind of need the stock market to be able to operate at full gear or close to full gear, so that there are M&A opportunities that continue to fuel the venture market. And I think as long as that's effectively, as long as there's uncertainty there, we're going to see reduced activity in venture, maybe trailing by a couple of quarters. Just before diving into our portfolio, maybe what does that mean more specifically for startups? I mean, the data from the startup genome is interesting here. They've surveyed companies in 150 countries. 41% of companies have less than 3 months of runway. 65% of companies have less than 6 months of runway. And 75% of companies have had to let go of employees, and 26% of them have had to let go more than 60% of staff. So we've seen a huge, at a global level, a pretty big reduction in the ability of startups to be able to thrive. Now, I think that's a bit different in Europe, to refocus the conversation where we are now. We've benefited from government support, and I think from what I'm hearing, at least, our portfolio today is still relatively small, but what I'm hearing is European portfolios, and I'd be curious to hear Matthieu and Irina's view on this, but are in better health than what the startup genome numbers would point to. So all this to say, for us, I think we're remaining cautious in our approach. I think it's the approach that we took in any event. It's our kind of DNA as an investor. We're remaining cautious. We're continuing to look for and seek what we've always sought, which is non-cyclical businesses, really strong unit economics, decorrelated investment themes, but we are investing in this period, and in fact we did close a deal in the last couple of months. Now, it was a deal that we were connected with before, but we did manage to close a deal then.
Okay, so I totally agree with you about the disconnections with the stock market and the actual state of the economy. It looks like there's probably a lot of money which doesn't really know where to go or is currently going in the stock market. But one other point you made is around the aspect that maybe deep tech is less cyclical, less correlated with the general kind of consumer economy, because a lot of deep tech companies tend to be B2B. So maybe if Matthieu, you want to talk about that as well, on the comment on how your portfolio is doing in this cycle.
Yeah, so I mean, just to complement on what Alexandre was saying, on our side, we're not
Matthieu
Can you hear me? Yes. I was just saying, so we're not stopping the activity. We continue to instruct deals, and we closed deals recently also. I think that one thing we have to recognize is that there's a lot of uncertainty. We have no clue. I mean, Alexandre was mentioning the stock market. I think we have no clue of how long this is going to last. And so the challenge is to make sure that you have sufficient runway for your portfolio companies. So that's obviously something that led most of our portfolio companies to take measures, actions, whatever they are, and leverage the various instruments that various governments have put in place to extend their runway. That being said, I mean, just mean that we are becoming cautious. We are extra selective, but we're still making deals. Last comment, maybe on your comment, Benjamin, about the potential decorrelation of, or let's say the fact that deep tech is maybe less sensitive to the context. I'm tempted to say yes, because the timeline is usually much longer in that space. But at the same time, one of the challenges is that many of the milestones that those companies are running after are sometimes dependent on relationship with corporates. And so I would expect some of the milestones to be potentially impacted.
Okay, so Irina, do you also observe similar things in your portfolio? And do you see a slowdown in business, even if it's not in the consumer sector?
So, to answer your last question first, there is a probability that we will see a slowdown in the capital invested in 2020 in the ecosystem overall. But that's for a combination of factors that, rounds may take longer to raise. Some of the investors that would have come to Europe may not, because it's not their core geography. We may see a compression of round sizes. So we may see a slowdown. Us as a firm, we are still evaluating companies and meeting companies. And we still remain kind of focused on our mission to find to partner with the founders who deliver these positive transformational changes for the long run. I think on deep tech in particular, I would say it's a combination. I agree with what's been said around there are impacts from the kind of external factors that cannot be ignored. There may be impacts on valuations for next rounds. There may be or ability to raise funding if this kind of crisis, or to say, prolongs. There may be an impact on indirect impact from their ability to operate at the same speed, either because, as it was said, corporates may not partner as much, or because certain things like in the factory or in the lab take longer because people can't be there. Or because certain trials, for instance, in the kind of specifically about biology, clinical trials take longer. So there's definitely a delay. At the same time, these companies also operate on their own cycles almost, where the milestones are, at least at Series A or at C, they're still working on product milestones more than on revenue milestones. And those are a little bit more protected from kind of some of the other markets. In terms of the bigger, what's going to happen, I don't think anyone knows, and I think public markets are surprising everyone, but we don't know how long it's going to take. We don't know the shape of the recovery, and what the thing we are preparing ourselves for is, prepare for the worst, hope for the best kind of scenario, where we are telling all our companies to try and prolong the runway for up to 2022 in this space, and take measures early. Almost better to be more paranoid than less so. But then on the flip side, we're aware that if you are a company that is a bit more protected from this direct impact or favored by it, and have capital, you can also go ahead more. And so there's this balance between how do you focus on the right things that preserve that capital. And also on the flip side, I think this is an opportunity for companies to just think, kind of step back and think, what do they really need to invest in, and almost add this extra degree of focus, which doesn't always happen in a growth phase where everyone is just like raising more money, hiring more, and so on. You never stop to think, are we actually doing this the right way? And now, scarcity creates focus, and there's advantages to that in the long run as well.
And I think we've lost Ben. Maybe while Ben's away, just to pick up on some of the stuff that Irina was mentioning, at least when it comes to entrepreneurs in the room, let's say in the virtual room, we've always taken a position that it's critically important to think about who do you bring on as investors, what does your syndicate look like, and making sure that you do have the right investors around the table to add value, as well as potentially finance future rounds. And I think that's never been more important than now. And so if you're thinking about raising funds, if you're currently raising funds, I would encourage folks not to be too focused on valuation, of course, within reasonable dilution, but don't be over focused on valuation at an early stage. Instead, really think about who do you bring around the table, because it's in complicated moments that these folks will show up to support you and your team. And I think that's never been more important than now if you're thinking about raising money.
And I completely agree with what you just said, Alexandre. I think the syndicates is even more important than before. And somehow, I'd say it's even more important than before, also because it could be also a way to, let's say, keep the round of the size of the round still big enough to ensure sufficient runway. Because these days, if people start to be extra cautious, then they will be tempted to write smaller checks, and you'll need more people for the same runway. So syndicate to me is something we'll see more and more. I was listening to other investors yesterday that were saying that they used to basically position themselves as a very strong lead investor and potentially take the whole round on early stage rounds. And that these days they're changing their mind and trying to mitigate risk by writing small checks, which means that they will start co-invest with others.
Okay, maybe so a question from the audience. So when it comes to extending runway, what are the actual measures that you would suggest to your portfolio company? Maybe, I don't know, we can start with Matthieu.
I mean, I don't think there's one size fits all in that space. It obviously depends on the business of the company, what it is doing, which space, is there hardware, no hardware, etc., etc. But I think it goes from anywhere from just making sure that you're just focusing on the core business and not being distracted to laying off people. And there's a whole spectrum of things there. There's also obviously a lot of instruments that have been put in place, whether it's in the US with the PPP or in Europe with various unemployment programs and subsidies and loans. So here, I think it's the key question is really to make sure that when you pick some of those tools, whether it's adjusting workforce, whether it's taking a loan or things like that, you really understand what it means for the future of the company, because this will have impacts on the runway, but on the ability to execute, et cetera, et cetera. So I don't think there's one answer. It's on a case by case.
So sorry for the connections, but one more question I had was regarding new deals. So we don't know how long this situation will extend, but can you picture doing deals without actually meeting the companies in person or seeing their products in person, like doing everything remote?
I think that's a very tough one. On our side, we are early stage investors, and so the people are super important. And I do think that this is clearly a challenge if we can't go and see people, meet with them, see the workshop if there's hardware. That is for sure a challenge. Honestly, don't have the question. Maybe the VC industry would have to reinvent itself if that thing lasts. But hopefully we'll be able to travel again and meet entrepreneurs.
Because I guess the challenge is that when there's a lot of information you get from actually visiting their offices and seeing their products and seeing how the environment where they work, right?
Yeah, I mean, if you put your nose into the workshop of a hardware company, it tells you a lot. So if you can't do that, you need to find other ways to do your due diligence. And to date, I mean, I don't have the solution.
Irina, well, what's the situation for you? Like, do you feel that you'd be in a position to do like new deals entirely remote?
Yeah, so I think adapt to whatever is thrown at them. So if this lasts long enough, we'll all adapt and have to do business in the kind of a new setting, even if it may feel uncomfortable for a while. So we have done one of our last investment was in a company where we have one of us has met the founder, but actually the investment committee and everything was done remote, and the founder presentation to our team was done remotely. So it can be done. I think in terms of deep tech specifically, it does depend on whether it's hardware or not. We invest in deep tech that isn't hardware, and if it's science based, you can look at data without being in the lab. If it's like, for instance, computational platforms for drug discovery, which is like one of our investments last year, you could do something like that. I think it is indeed harder when you have to do a hardware investment to not see it. But again, we've seen actually like founders get very creative around how they kind of almost film the entry in the company, and that makes you feel like you're present there, and then literally like go and take you with the camera through every of the components and let you ask questions and zoom into specific elements. So I think with the right tools, it can be done. The more interesting question is, what is the opportunity to create those tools to enable things like that, right? Because that's the thing, we don't have, Zoom is not fit for purpose for all of these use cases. But if we do have better tools, then we could do it in the long run.
Yeah, that makes sense. I'm looking at the questions that people have asked, and there's one about whether VCs are increasing reserves for investments to reach a milestone and for follow-up rounds that will take longer. So is that also something that you do at Atomico, like possibly investing larger amounts or reserving more capital for companies, considering the extension of timelines?
Again, I think there's no one size fits all, and so it really depends on the company and what the situation is. But we have taken into account larger reserves as a total amount, but doesn't mean that every single company that we invested in that we will allocate those disproportionate reserves, because not everyone needs them, right? We have companies that we tend to fund deep tech companies with a longer runway than non-deep tech companies, so are at least kind of 2 years, and therefore we see a lot of our deep tech companies are actually, now we see the benefit of that approach where they do have some buffer already, and we take that approach in a bull market as well. So because we know things take longer, and there's risks you can't foresee, and as I said, there's some non-cyclical components to deep tech anyway, and that's our approach more broadly.
Matthieu, how about you guys at Airbus Ventures? Are you also allocating more capital, preparing for more follow-on?
On our side, I think the first step was to go through all the portfolio, like I would assume most of the other VCs, and take those measures to extend runways. At this stage, I don't know in detail all the portfolio companies, but I don't feel that any of them was at this stage again really impacted by major changes in milestones and things like that. We're also early stage investors, so they're maybe less sensitive to let's say the impact of the situation to their revenues. But to date, no specific action on that front. We continue to be to be monitoring all the portfolio very closely, but we review that on a regular basis and make the appropriate reserve when we feel it's something we have to do.
And in terms of, you mentioned suggesting measures to extend runways, so I guess everybody has read like many articles about that already, but what are the typical advice you give to startups? Have you also heard from startups some like kind of creative solutions?
We basically touched that point when you were disconnected, but
sorry.
I think one of the elements we haven't mentioned and that I'd like to put on the table is also the fact that in the current context, I mean, those companies have money, and when you have money, you need to be able to put that money at work at the right moment to get the most out of that money. And so I think that when companies are actually using the capital they have, they should always ask themselves whether it's also the right moment where they can actually have this money producing as much as possible. And in some cases, it may be better to delay things because you can actually get more out of that money. While if you're using it now, probably not the best moment because you won't get the result, or it will be somehow diluted and you'll get only 70% or 60% of what you would get in a normal period. So I think that's also one of the elements on which they can play. We lost Benjamin again? No.
Yes, maybe we lost Benjamin again. So it's a question from the audience, and some interesting as well is, do you think you will be refocusing your investment strategy on certain verticals or certain industries? For instance, Irina at Atomico, what do you think about that?
We will keep an eye more broadly on what are the kind of opportunities that this new reality creates. whether it's, you know, new work, if the world moves to like more remote work, and if that trend accelerates, what are the kind of opportunities that creates, but also what are kind of sectors that are starting to get disproportionate attention. And I do think that something like healthcare has all of a sudden become a much more strategic asset to a country than it used to be. You know, having said that, there are still the realities on the ground on navigating that sector, which is not gonna kind of all of a sudden change and accelerate. So I think we are, you know, we are very much thinking about what are the kind of opportunities and challenges this creates, and it's not necessarily only about a sector, but it's also about specific types of businesses and tools and business models that this may create. But yes, as any change, it does open up a space of opportunities, and it does accelerate or decelerate certain sectors.
I think maybe
Thank you, Alexandre.
Yeah, just to add to that, I think the one way to see this, if we can see through the pain and the suffering that, you know, this period has caused for many folks, I think one way to see this is the huge amount of opportunity that it creates. And an immediate indicator of that is if you've kind of seen the growth of meat alternatives in the last year, and more specifically in the last quarter. You know, sales have jumped in the US and in the UK of plant-based alternatives, and accordingly, you know, shares in Beyond Meat have jumped kind of 49% in the last quarter. So I think one of the things that's highlighted for me is are the kind of underlying behavioral changes that were already in motion. How are those going to be accelerated in the you know, by the current crisis and COVID situation? And you know, when I kind of take this big picture thinking a bit, you know, I'm seeing a huge amount of opportunity, right? Think about the massive reorganization of work that Irina was mentioning towards remote setups. You know, who is actually going to crack the online tool where we can actually pick up on the nonverbal communication that you usually have in meetings, right? Who is going to crack the online tool that gives you the type of emotional connection, empathy that you kind of get when you speak to someone live? If you continue to push that thinking, you know, that will naturally push you towards a, you know, what could be the largest urban, peri-urban, semi-urban reorganization in history, with people moving out of the city, you know, towards the countryside, towards larger homes where they can live in really peaceful environments and yet still be, you know, fully connected and fully engaged and fully committed to their job. And I think that's going to create a huge amount of opportunity. You can think about the impact of that on areas like construction, right? The acceleration of either, you know, new housing or refurbishment done in a fully sustainable way at a fraction of the cost of what was happening before. We're seeing a lot of companies in that space, as you know, and that's probably going to accelerate as maybe young couples seek to move out of cities. Or you'll have massive implications for transportation. I mean, look at the changes that Paris has enacted, you know, in the last few weeks on micromobility, opening huge areas. I think it's, you know, 300 or 400 kilometers of new bike lanes by just shutting down roads. And that's going to continue to accelerate, but also on large infrastructure projects, right? If a lot of the population lives outside of cities and then needs to transit into cities once in a while, you know, how do you continue to accelerate large infrastructure on that front? And then, you know, less relevant for us, but obviously, you know, everything that has to do with online shopping. What happens when it's not just that there's an acceleration of shopping, but what happens when you can't even try clothing in a store anymore? Then you really never go there. And so I think, you know, what this has highlighted for me is how, again, is that accelerating underlying behavioral changes that were definitely in motion, definitely happening, but are going to continue to dramatically accelerate through this period. And that's something that I think, you know, at least we're thinking about, and I think a lot of our colleagues and investors are thinking about as well.
It's thanks for those are actually really good ideas on that. It's kind of an anecdote, but a few weeks ago I was discussing with a VC fund called 50 Years that invest in very similar areas to yours and to others in deep tech, in a very kind of future-looking sectors. and they take their name from an essay written by Winston Churchill in 1931, where he basically tries to forecast what the technology of the time could lead to, and he looks into a possibility of genomics, the possibility of food, cultured food, and one of the things he mentioned is that once we have all the tools to communicate remotely, maybe the congregation of people will not be necessary. So we could almost see that maybe he forecasted the results of pandemics as well. But that would be really interesting in terms of changing the physical landscape of how people work and live. And there's definitely huge opportunities in those sectors. Actually, on that topic of opportunities created by COVID, so some sectors definitely have a kind of a tailwind, while others are more impacted. Which sectors are you particularly paying attention to as things with high potential? Maybe starting with Matthieu, and of course talking beyond the immediate obvious like COVID solutions, but other things that you see would have a lot of potential in a post-COVID world.
I think I'm just thinking about our investment thesis that's articulated around the autonomy, electrification of vehicle, connectivity, digital design and materials, Industry 4.0 things, new space, and also security, frontier tech. I think that, and if I look at what's happening and the deal flow and things like that, I feel that the connectivity aspect is obviously the one that is seeing the most traction or the most potential for, let's say, in the current situation. It's clear that there's been a change in the way we work. And if you look at, for example, the impact on bandwidth, internet usage, and stuff like that, I was looking at a couple of statistics the other day, but I think the internet usage jumped by something like 40% worldwide on average, and in certain countries much more than that. Thinking about Italy, I think it jumped like 100% or so. So clearly, this change in terms of pattern will impact the way we look at things. And like Alexandre was saying, mobility is also an area that will be changing, and this will create great opportunities for some people. Retail is also impacted, etc., etc. And so, as far as I'm concerned, I would see great potential in the area of connectivity. Yes, whether it's ground-based, space-based.
Irina, like are there sectors that you pay particular attention to in the current context?
I mean, again, I don't think our job is to also be open-minded, right? And so I like to think that the best opportunity is one I haven't thought of and I haven't seen. But in kind of like, so without being too prescriptive, a few areas that we think are going to accelerate is, so there's definitely more attention in the healthcare space, but not just kind of digital health, but also how we get drugs quicker to market for situations like that. And the computational drug discovery space, I think it's going to see an acceleration based on that. There's the kind of automation trends that have been happening that, again, we think are going to accelerate, whether it's onto enterprise or kind of more hardware driven. I think in the Industry 4.0 space, again, there are segments that are impacted because, as we said, you may not be able to do the full tests. You need to be present to develop your product further. But at the same time, if you think kind of long term, I think the potential that the Industry 4.0 robotics creates in the manufacturing space has been just highlighted and accelerated by this crisis. I think the connectivity point is valid. And then I think there's like a broader question, like if you just do this exercise of imagine tomorrow we all have to work from home, or we have to work remotely and the nature of work changes, what will we need? And there's probably a set of non-deep tech tools that we'll need, and then there's probably some changes to the way, you know, our lives and communities and how we're building that, and implications from that front. You know, some people speculate that AR is going to be accelerated by this. You know, we haven't necessarily seen that yet, but it is possible. And then there's some other industries that, again, maybe less on the deep tech front, but the obvious winners like gaming or so I think it's a very broad space, and it's a very broad set of, and on almost in every pocket you can find an opportunity. And yeah, I think we keep just like an open mind on what those are, and but then there are some common elements to that are less dependent on a crisis or no crisis, which is, you know, the founders and the ambitious and the power of a founder's vision to really shape the world and shape the future, which remains the same whether it's a bull market or a bear market, and that's kind of probably one of the most important things we look at, independent of sector and area. So trying to not be too theoretical, but at the same time keeping an open mind, and also developing our own thesis kind of sector by sector is how we approach things.
Yeah, like I think it's quite common for most of us to have this balance between being, you know, thesis driven and also opportunistic of what might come to us. And through our fund at SOSV, actually I realized I failed to introduce it at the beginning. So we run a number of accelerators as an entry point for investments, and two of them are most active in synthetic biology, a program called IndieBio based in San Francisco and New York, and another one called HACS based in San Francisco and Shenzhen. And what we've seen is that for many of the portfolio companies that we have now, for both hardware and biology, it's over 100 each. We see a lot of appetite in any solution that would reduce human intervention. So robots in retail, of course, anything related to sanitation, maintenance. So we see a lot of very interesting kind of a demand and a really strong tailwind around those. So of course, it's slowed down by the difficulty of setting up pilots or deployments. But overall, this is I think a strong direction. So we keep investing in those areas. Okay, I see that we have about 10 minutes left for today's session. So
maybe just
Ben,
just before we close, I think on the themes, you know, I want to draw one parallel that is a bit less talked about, but I think is important here, is the parallel between the way in which we've responded to this kind of health crisis and the looming climate emergency that we have. The change of behaviors on a massive scale to protect ourselves, I think, could inform the way that we think about climate, and ultimately a lot of the determinants of climate security are quite similar to the determinants of health security. When you think about, clean water, clean air, sustainable food, etc. And so for us, we were already orienting a large part of our investment towards all kind of, sustainable and climate related opportunities. And I think if anything, this crisis of the last few months has pushed us to continue to move in this direction. Looking at long-term trends that are continuing to inform the way in which the economic opportunities that we can see that are related to climate in areas like, I mentioned earlier, but sustainable construction, freight and logistics, looking at kind of land and ocean carbon sinks, such as, moving agriculture to sustainable practices, regenerative ag, preserving ocean biodiversity, stuff that has to do with sustainable industry, software companies or AI companies in the kind of carbon measurement space. So I think for me that the events that we've all lived through in the last few months have continued to push us in that direction from our own investment perspective. And of course that goes without saying, as Irina was saying, that all of that, you can put a frame around what you're seeking from a thematic perspective, but it ultimately does boil down to entrepreneurs and their ability to bend reality, and that's ultimately what we're looking for.
Yeah, I think related to what you just said, if we look at another level of this kind of deep tech sector, is the ability for deep tech funds to raise capital themselves and to exist. So at the moment, there's not that many deep tech funds that exist, and most of them are pretty early stage, pretty small scale, because we haven't had the chance to go through an entire cycle to prove kind of the category. But I think the COVID situation, the need for automation, and all the disruption to different industries and businesses highlights the need for the deep tech type of solutions. And even though the potential funders, so the corporates, the family offices, the institutions, and currently a lot of financial pressure and uncertainty, it might also prove to be beneficial to the deep tech sector by bringing more long-term, patient capital to the category. Okay, so we'll see. Maybe out of the crisis, we'll see a lot more deep tech funds that will be able to finance more startups on the larger rounds. Yes.
Just I had a quick question for you, because we are talking about the let's say the investment side in deep tech, but let's say if you look at that as if it was a kind of value chain, if we move upstream, there's the accelerators and incubators and all that part of the ecosystem, which usually has there's a lot of physical interaction to form teams, to have them grow, accelerate. And I was curious to have your view on that point. We touched it quickly the other day, but I think that's interesting to see how that part of the ecosystem is going through the situation.
Yes, so for us, the accelerators we run are always our entry points into investments. So we start from pre-seed. A typical check is a 250K in cash and services, and then the majority of our fund, about 3/4, is deployed at the seed Series A. So we have basically accelerators are a must for us to continue investing. And as you said, the problem of programs that typically require physical presence. So we've made a lot of adjustments. At the moment, most of our programs are run remotely, including a biotech program and part of our hardware program. This is also compounded by the fact that there's quarantine when people travel. But I have to say that at the moment, it seems to be okay because the teams typically have access to some level of facilities where they are. And some might actually find it more convenient not to have to travel, stay where they are. Now we're also losing on some of the benefits of being part of a program. There's a lot of informal interactions, fast interactions, access to suppliers, access to experts, access also to other participants in the program that are very useful to solve problems. Sometimes you just talk to another team and they have a solution for you that would take you days to figure out and that they can solve in 5 minutes. So we're losing some of that speed and some of those benefits. I hope that we can get back to some normalcy sometime soon. But that's the situation we're dealing with. I guess everybody's in the same boat. I was surprised by how quickly we managed to go online and how things could still continue to work, even though we felt that the physical presence was really, really important. It turns out to be a bit less important than we thought. Now we'll see. At the moment, I think Accelerator is also a big source of deal flow for later investors. I don't know what the situation is in your respective portfolios, but I would imagine that many of the startups you invested in went through some accelerator somewhere. So if that type of guidance becomes less accessible, the startups are less prepared, less networked, less introduced, and that might also overall slow down the investment cycles and also reduce the chance of success. But that's my assessment. If any of you has comments on that.
Maybe we can go, if no one has comments on the questions for the last few minutes that we have. There was a question, like when we're talking about deep tech, on some sectors, it's quite heavily dependent on the link to corporates. And if in some sectors, the corporates stop investing, purchasing, or doing proof of concept with startups, do you think that there will be a big drop-off in terms of investment in those sectors, in those verticals? Maybe Matthieu, what's your view on that?
And not talking specifically about let's say the relationship we can have with the Airbus group, but just looking out through the lenses of our portfolio companies. I think it all comes back to whether your solution is really a must-have for the corporate you have in front of you. I've seen anything from some corporates going silent to others accelerating on some projects, and there's even some there's some corporate that we've seen deciding that, okay, they have to rationalize the number of projects they're working on, and we have some portfolio companies that have been shortlisted. So basically, the budget that was allocated to those companies has been somehow sanctuarized. I don't know if that's an English term, but I don't think there's a global thing. Obviously, everybody's going to be a bit more cautious. But I do think you could also get some positive impact on some companies if they are well positioned on something that is really key and contributing either to the future of those companies or to the let's say to the operation and facilitating, as Irina was saying, facilitating the interaction between professionals in the current context. I do think that there's also some elements there that could be interesting.
Okay, I see that we have 1 minute left. I assume that a lot of you have to jump into other things. So I think we'll just take this chance to thank our panelists and thank our audiences for their many questions. And I think maybe Thomas, if you want to wrap up and announce potential future events or other activities.
Very much, Benjamin, and thank you all for your insights. And there are some people still replying to questions on the panel. And yes, so we've yet to announce the next sessions for our webinar. So just keep posted on our social media for that. I'll just post as well on the chat link to the investors mapping that we've been doing. And that we just published. And yeah, if you have any questions for us or anything, just don't hesitate to contact us directly on the if questions are still on the chat. And then the replay will be available on our YouTube channel. The replay of the whole discussion very soon, I guess, starting from next week. So thank you very much, and well, good luck to everyone in these difficult times.
It might be the best time to build a startup, as someone mentioned in the chat. More talent available. All right. Well, thank you, everyone, and
thank you very much, guys.
See you at the next events.
Thank
Bye.
you.
Thank you very much. Bye-bye.
Cheers.